Anish from BlackBull Markets here. Behind me, the chart of the Aussie dollar against the US dollar. Now, we're only a couple of weeks from the year-end trade, and markets typically slow down at this time of the year. However, we do have one last hurrah this week with the Federal Reserve speeches and other central banks speaking about the future for interest rate hikes heading into next year, and of course the whole tapering story behind that. Now, a lot of focus has been on the Fed and their plans to taper and hike heading into next year. What that's caused is some uncertainty in the stock markets, with stocks coming down today in the Nasdaq, for example, down over 1.5%. Bit of a rebound now heading into the post-session trade. However, that's impacted currencies like the Aussie, and the Aussie remains particularly sensitive to tech stock falls, and what we saw was a bit of a fall down in the Australian dollar recently, down to a key support area at 70.89. Now, we've drawn a 1 hour chart here on the Aussie dollar, and as we look at more possible dollar buying potentials in the FX market, we could see some short opportunities here breaking these key support areas that we've drawn and outlined with our Fibonacci retracement from the December lows to the December highs. So not much of a range to go by. However, if you're looking for range trading opportunities, we could find some luck here. We can see 70.89 as a near-term support. What we saw was a double top form around the 71.85 mark, a struggle to break it again, and then a fall to the downside in line with the US stock volatility and repositioning in US dollar buying. Break of support 1 here at 71.38, then break of support 2 here at 71.11 has led for more selling pressure, and what we can see is markets now looking to reverse all the gains that have been formed in the Aussie dollar. Similar story with the Kiwi, of course, as well throughout the rest of the month, with pressure to the downside heading back to the 70-cent mark that we saw back down to the 70-cent level. That's what investors are eyeing, especially as commodities start to unwind, more particularly oil as well, from those plus $80 barrel highs. Now, if we head our attention over to the 4 hour time frame, we can see what the technical configurations are looking like with that same Fibonacci level drawn in that area, 71.85 high, just shy of the 70-cent low that we saw earlier on this month. Of course, the trend of the market has been to the downside on the Aussie dollar, different from last year, of course, where we saw significant increases against the US dollar with the Kiwi and the Aussie. That's shifted. We've now come down. We're now looking for potential more downside, and for investors to, if you're looking to trade with the trend, look at spotting highs and look at selling highs. What we could see is we struggled to get past 71.85, and we've come back down below the 20-day moving average, heading down to the 50% fib retracement level of those monthly highs, which is an indication of some indecision at this stage short term. However, a break of 70.89 could lead the pathway back down to the 70-cent mark that we saw coming back in line with that overall trend line that we have in place ever since the beginning of the year started. So it's something to bear in mind when you are trading the Aussie dollars, to understand the overall fundamental trend of the market and potentially looking for those medium to short-term opportunities for taking advantage of that. So that's an idea heading into the end of the year. My suggestion for you would be to trade safe. Look at how the stocks play out, because we could see more unwinding of profits, more unwinding of positions heading into year end, and that could impact more risk off currencies like the Aussie dollar, and of course the US dollar, which is becoming more risk on, could gain in strength. Do watch these markets. Have a great holiday trading period. Trade safe, enjoy yourselves, and we'll see you in the new year.